Welcome students of class 11th commerce. Today in our accountancy syllabus we are going to learn the various factors that affect the depreciation. Dear students, depreciation is nothing more than the written off value of the cost of an asset over its useful life. In general life, we often say that a car has been depreciated in value because value of such a car has declined as compared to the value of other cars available with the latest technology in the current market. However, from accounting point of view, depreciation is not a method of valuation and approximating current values such as replacement cost or resale value, but a process of allocating of cost over the period of useful life of an asset. For ascertaining the true cost in any business operation, depreciable amount of the depreciable asset is to be allocated over its useful life in such a manner that only true and fair values of the asset is shown in the balance sheet of the business enterprise. Here we have used three important terms such as depreciable asset, depreciable amount, and useful life. These terms have been already discussed in the previous lecture. Dear students, today we are going to discuss the various factors that affect the depreciation. Number first is actual cost of the asset. Number second, estimated useful life of the asset. Number third, estimated residual scrap value of the asset. Let us explain one by one. Actual cost of the asset. Actual cost or historical cost means the acquisition cost of the asset and includes all incidental expenses which are necessary to being the asset to its present condition and location. Examples of such expenses are installation charges, freight inwards or expenses incurred, the improvement of such asset, and which are of capital nature. Estimated useful life of the asset. Estimated useful life of the asset is either number one, the period over which a depreciable asset is expected to be used by the enterprise, or number second, the number of production or similar unit is expected to be obtained from the use of the asset by the enterprise. And number third is estimated residual or scrap value of the asset. Residual or scrap value is the expected value which may be realized when the asset is said or exchanged at the end of its estimated useful life. When residual value is significant, it should be taken into consideration for computing depreciation. However, an insignificant residual value can be ignored for computation of depreciation. Depreciation is a continuous process, but we don't record depreciation daily. Actually, the total amount of depreciation to be charged on any asset is an advance expenditure which have been paid by the enterprise at the time of acquisition of such asset. In other words, we can say that the expenditure should be treated like a deferred expenditure and only adjusting entries. The charging a reasonable and appropriate amount of depreciation to a revenue in the income statement and required to be passed every year. Methods of depreciation. There are various methods of estimating depreciation expenses such as straight line method, diminishing balance method, Some of the years digits method, double declining balance method, annuity method, seeking fund method, etc. However, in the present chapter, we will discuss only two methods of providing depreciation, that is, straight line method and written down value method. Dear students, today we learn the various factors that affect the depreciation and various methods we use in depreciation.